Unemployment rate in the U.S. rises to the highest level in over a year, and the economy adds more jobs than expected. Stocks closed mixed on Friday as the S&P 500 and the Dow gain, while the Nasdaq closes just below the flat line. Asian markets are largely higher, while the GIFT Nifty indicates a positive start for the Indian market. Oil continues to rally. Brent edges up to nearly $89 a barrel as Russia agrees to cut oil exports, while Saudi Arabia too is expected to continue with production cuts. A higher than expected fall in U.S. crude inventories also leads prices higher. And Uday Kotak steps down as the MD and CEO of Kotak Mahindra Bank, with Deepak Gupta taking over as the interim chief. Talking about the surprise move, Uday Kotak tells CNBC TV18 his decision was completely voluntary. He also says the bank has sent names of 2 MD and CEO candidates to the RBI for a smooth transition and is awaiting approval. Royal Enfield's August sales come in higher than expected at over 77,000 units versus Nomura's estimates of over 75,000 units. Hero Moto, meanwhile, reports a 5.6% year-over-year growth in sales. There is a strong case for India to host the Olympics. That's the word coming in from International Olympic Committee President Thomas Bach, speaking exclusively to CNBC TV18. He also hints that the return of cricket to the Olympics could be on the cards in the 2028 edition of the Games to be held in Los Angeles. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you as we get into a brand new trading week. There's lots for us to talk about. That big Q from the US that we were all awaiting, the jobs data has come through. So we'll get to that in just a bit. But for now, the Asian markets have seen quite a recovery from the open. So around half an hour ago, we were seeing cuts pretty much across all of these markets. There's been a sharp jump. So you have the Hong Kong market, which is now trading with around 1.5% in terms of gains. The Taiwanese index has also moved into the green. So that's around 25 points higher over there. The Nikkei market's around 0.4% in the green. And across the board, actually, Kospi was the only one which was struggling a little bit till 5 minutes ago, but that has also managed to at least move into the positive territory. So you are seeing quite a good move coming through as far as the Asian markets go. Let's also bring up the GIFT Nifty for you, because there's been quite a recovery there as well. And we now have an implied open that is showing us around 32 points higher. So it looks like the start could be a little bit in the green, but let's see how things really move from there. That's what's happening across Asia. But let's talk about the US market. Wall Street ended Friday's trading session mixed. So you had, of course, this is following the jobs report that came through. So the Dow Jones was up around 115 points. You had the S&P 500 and the Nasdaq, which were pretty much flat at the end of the trading session, like you can see. Now, if you look at it for the week, the Dow Jones and the Nasdaq added 1.4% and around 3.3% respectively, notching their best performance that we've seen since July. In fact, even the S&P 500 gained around 2.5% for this week, and that means it's been the best week for the S&P 500 that we've seen since June. So definitely a good week coming through from Wall Street. Today there is a holiday on account of Labor Day, but that is how last week really performed. But speaking of the US, let's focus on the labor market, because that is the key Q that came through. The non-farm payrolls for the month of August rose to around 187,000. This is higher than the estimates that we had of 170,000. Meanwhile, if you look at the unemployment rate in the US, that has also gone up. So that is coming at 3.8%, which is the highest that we've seen in over a year. So we have CNBC Steve, who's standing by to bring us a wrap of all of the highlights that came through from the jobs report. Steve.
Here's the data from the morning, 187, but those big revisions take some of the shine off a bigger than expected number. Revisions bring the 3-month average down to 150,000, which is looking kind of normal. Unemployment rate ticking up by 0.3. Talk about that in a second. But a 0.3 increase in the labor force participation rate. Average hourly earnings cooling quite a bit, just 0.24% for a 4.3 year-on-year. Now, the higher unemployment rate came from a massive influx into the labor force of new workers, pushing up the participation rate to the highest level we've seen since the pandemic. It remains about 0.5 point below the high water mark in February 2020. The key to whether this is the beginning of more persistent or worrisome weakness is whether these new new entrants to the workforce find jobs. Sometimes it takes longer than a month, so you don't want to make a judgment right away. Here's where those jobs were: private education, health services, 102. It's kind of what you'd expect around this time of year. Leisure and hospitality had been stronger than that, but still pretty strong. And goods producing, even despite that report Rick just gave about weak manufacturing, still pretty good on construction and manufacturing. But a leading indicator, temporary help down again, 19,000. Transportation and warehousing still undergoing, I think, a restructuring from all those folks they hired from the pandemic and the shop at home wave that hit us. The jobs number suggesting to some in the market, hey, the Fed could be done here. November probabilities before and after the jobs number, 42%, down to 36%. So easing off on the expectation there could be another cut, only a 7% chance for September. The market thinks the Fed is going to digest a couple more inflation reports, another round of payroll data before figuring out if they can hang up their hiking hat, guys.
All right, Steve, thanks a lot for getting us all of that data as well as that analysis. But staying with the U.S. jobs report, let's also bring you some important opinion. This comes in from Lael Bernard of the National Economic Council as well as a word from Goldman Sachs. Listen in.
I think what we see is a picture of a strong labor market. If you look at the number of people coming into the labor market, it's really encouraging. And so that number is just a reflection of a great jump in participation in the labor force. I think that reflects the good economy and the really terrific jobs that people now have access to.
I think it's a very constructive report. We had a pretty good increase in non-farm payrolls, in fact, somewhat stronger than expected, especially if you allow for some of the special factors, the yellow bankruptcy and the Hollywood writers' strike. If you add that in, you're above 200,000. Household employment actually growing above 200,000 as well. The increase in the unemployment rate that we saw, which is, pretty sizable, 0.3 is pretty sizable, but it was entirely driven by an increase in labor force participation, which is what you want to see. And then the average hourly earnings number did show a downside surprise, only 0.2 increase. And that is also what the Fed wants to see, because at this point, wages are still growing somewhat faster than what's compatible with 2% inflation in the long term. So if I look at this, and then also if I bring in the JOLTS number, the job openings and quits numbers that we got earlier in the week, this is very consistent with a soft landing.
All right, that is some important opinion that we're tracking from the global markets, and that's all of the cues that are really coming in. But let's now talk about everything you should watch as we get into this trading session, as well as some of the individual stocks. So we have Ekta, Mangalav and Surbhi all here to take us through the trade setup this morning. Guys, a very good morning to all of you. Ekta, let me come to you first. We were speaking about this earlier as well, that we've definitely started this series very strong, but take us through everything that we should watch.
Thanks for that. Well, yes, the markets did break their 5-week losing streak on Friday. We had the markets which started the September series on a strong footing and posted the biggest single-day gain in 2 months on Friday's trading session. The India VIX, which is the volatility indicator, was down around 6% as well. Macros have supported us. GST collections for August were up 11% year-on-year. India manufacturing PMI at a 3-month high for August. Global cues intact overnight. US markets, like you mentioned, the Dow closed more than 100 points higher. Best week since July. The US unemployment rate came in at 3.8% versus estimates of 3.5%, and the US added more jobs in August than expected. This will all be precursors or important data points for the Fed when they meet on the 19th and 20th of September this month. Asia is largely mixed at this point in time. Gift Nifty is indicating a positive start. Watch for banks, which will be in focus on account of Uday Kotak stepping down a few months earlier than anticipated. Mid-caps outperforming. It was up 3% last week. And Brent crude, which is at multi-month highs. In terms of larger cues, we do have the G20 summit September 9th and 10th. We have the India CPI data, which is on the 12th of September, US CPI on 13th of September, and the Fed meet, like I mentioned, on the 19th and 20th of this month.
All right, so lots to track this month in terms of cues as well. Ekta, thanks a lot for that. But let me also go across to Surbhi now, who's going to take us through all of the stocks that we should watch. Surbhi, clearly the big news this weekend was, like Ekta mentioned, the news coming in from Uday Kotak resigning a little bit earlier than expected.
That's right. So the big one is going to be Kotak Mahindra Bank for today. Uday Kotak has resigned, as we all mentioned, effective 1st of September. Deepak Gupta will conduct the duties of MD and CEO until December 31st. That's when a new CEO will be appointed. Apart from that, August auto sales will be in focus. Eicher Motors, the total sales were up 11% on a year-on-year basis. And for Hero Motor, the total sales were up nearly 5.6% on a year-on-year basis. Tata Steel will also be on our radar. PTI reports that the company is in talks with the UK government to raise funds for the UK plant. ICICI Lombard, IRDAI has approved ICICI Bank to increase shareholding in Lombard in multiple tranches up to 4%. RVNL will also be on our radar. The company has won a 282 crore order from Madhya Gujarat Wijh Company Limited. The duration of this contract is 31 months. And lastly, GMR Power will be on our radar. The company receives a letter of award worth 5,100 odd crores from Purvanchal Vidyut Vitran Nigam in Uttar Pradesh.
All right, Surbhi, thanks a lot for taking us through that entire list. By the way, crude is almost at $90 a barrel, so watch out for that entire impact playing out on the stocks as well. But with that, let me toss it over to Mangalam, who's looking at cues from the futures and options space. Mangalam, looks like the start will be a little bit in the green, but how's everything else looking from here?
Well, the start will be in the green, and importantly, the start of the series was in green. And how, in fact, there was a big move that we saw on day one of the September series. On Friday itself, the Nifty rallied about 200 points from the day's low. If you just take a look at the levels, 19,250, which was an erstwhile support, was the one that acted as one as well, and we moved all the way up to 19,450 as well. And as on cue, we had purchase from both the DIIs and the FIIs in the cash market, so that was an added positive. Importantly, for most of the day, it was the Nifty Bank which was underperforming, but the second half, the rally was led by the Nifty Bank. So if you just take a look at the Nifty and the Nifty Bank by the side, the Nifty Bank moving up is powered the Nifty's engine ahead. Additionally, a lot of the shorts on the Nifty Bank and the Nifty were caught on the wrong side, and which is why if you just take a look at it, both the open interest on the Nifty and the Nifty Bank did see some unwinding, telling you that people had to cover some of their short positions. In index futures, however, the FI has bought about 100 odd crores. Their net long exposure still stands at 51%, and that's the big reason that we need to know whether this up move sustains or not. Why is that? Because in option selling, there is an equal number of call and put selling, a little more put selling than call selling by the FIs. They sold about 3.41 lakh puts as against 2.19 lakh calls, telling you on the way up there may be some resistance, but at the same time support has moved higher as well. So let's take a look at some of these active options. 19,300 put, extremely active in yesterday's in Friday's trading session. 19,350 put as well as 19,500 call. That's telling you that the range of the Nifty has now moved higher from 19,250 to around 19,350 on the way lower, and on the way up we are looking at levels upwards of 19,500 as well. The Nifty is crossed past important congestion zone where the both 50 and the 20-day moving averages were placed. So now we have to sustain above that and gain for further up move out there. The Nifty Bank that crossed the 20-day moving average on Friday now awaits some resistance at the 50-day moving average of 44,785. The question is whether it sustains above that or not. And finally, in terms of stocks, watching out for Indiabulls Housing Finance, we pointed out that there is a likelihood it will go into F&O ban, and yes, it has indeed.
All right, Mangalam, thanks a lot for that. Those are the cues from the futures and options space. But with that, it is time for a short break on the show. When we come back, the big news, we will get you excerpts from our exclusive conversation with Uday Kotak, who's outgoing MD and CEO of Kotak Mahindra Bank after the announcement of his resignation. So stay tuned for that very interesting chat. Welcome back. You're still tuned into Power Breakfast. Let's now get you the latest on one of the biggest developments in the banking industry. In a surprise move, Uday Kotak stepped down as Managing Director and CEO of Kotak Mahindra Bank 4 months before the end of his term. And Deepak Gupta, who is the current Joint Managing Director, has been appointed as the interim chief until the 31st of December. Now, after the announcement, Shireen spoke with Uday Kotak exclusively and began by asking him why he felt the need to resign at this juncture. Listen in.
The bank is required by the Reserve Bank to have three senior positions step down no later than 31st of December, which is the chairman, managing director, and the joint managing director. So we are all in what is called the transition phase as per the regulatory guidelines. And since all three of us were supposed to be going out before 31st December, I felt it appropriate that we sequence the transition. The bank has also confirmed today that it has made its application for the new CEO well in time to the RBI, and we are awaiting RBI's approval on that.
I wanted to get a couple of clarifications in, sir, because as you pointed out, even Mr. Gupta's appointment is an interim measure pending the RBI's approval. But you were also meant to submit names to the RBI, proposals from your end as possible successors by the 31st of August. Have you sent in those names, Mr. Kotak?
Yes, Shireen, we have sent in those names well in time to the Reserve Bank of India. And I would also like to clarify that the board has appointed me as a non-executive director on the board today.
Mr. Kotak, can you tell us how many names have been sent to the Reserve Bank? Is it 2 or more?
The requirement is at least 2 names, and the bank has sent 2 names in order of priority.
But informally, there was no sounding out with the regulator about this move.
The board of the bank is fully conscious of its fiduciary responsibility, including confidentiality to all its stakeholders. And the board has acted after I took the decision to step down. Therefore, the decision to step down was taken by me. It was a voluntary decision, and there has been no discussion of any nature prior to that decision with the Reserve Bank of India.
What has been the big learning and the big lesson for you? What do you take away, at the end of this 4-decade-long journey that you've made? As you reflect back, Mr. Kotak, what are some of the pivotal moments that really define your journey and the bank's journey?
I think the most important message which I take for myself is what you create must outlive you. And there has to be passion, there has to be purpose, and there has to be process. There has to be trust and transparency as you build the institution along the way. And extremely important to preserve the essence of entrepreneurship, even in one of the most regulated sectors.
All right, that is a very interesting chat coming in with Uday Kotak after news of his big resignation 4 months ahead the end of his term. Like they said, they've sent 2 names to the RBI and are awaiting approval now. But with that, it is time for a short break. When we come back, there's lots more news and updates, so stay with us. Welcome back. You're still tuned into Power Breakfast. Now let's bring you a very important update. India's first solar observatory mission was successfully launched over the weekend. An important earthbound maneuver was also carried out to raise the orbit of the Aditya L1 satellite. Now the ISRO telemetry, tracking and command network based in Bengaluru completed the complex operation following its initial earthbound maneuver. Now the next earth firing test will take place on the 5th of September, which is tomorrow at around 3 a.m. Aditya L1 is a specialized satellite created to conduct a thorough analysis of the sun, and it has seven different payloads, and all of them were in fact made in India. Just to remind our viewers, Aditya L1 successfully lifted off from the Satish Dhawan Space Center in Sriharikota, Andhra Pradesh on Friday. All right, so that is some important news that we're bringing you. We're going to, of course, keep getting you the updates on this one. But for now, we're going to wind down on this edition of Power Breakfast with the news that most Asian markets are in the green. The Seng has moved up even more. It is over 300 points in the green right now. And the GIFT Nifty also implies a positive open for our own markets. Thanks for tuning in. We have Bazaar Morning Call up and